Welcome back to Stocks and Trades channel. We provide easy to digest information in short videos about stock market investing, personal finance, money saving, and building wealth. Our content is designed to help you achieve financial freedom sooner. Today's video will provide news, insight, and investment suggestions on the week ahead. We'll analyze 2+1 stocks to watch this week and some others that will be volatile. So, let's begin. Disclaimer. All trading involves risk. Only risk capital you are prepared to lose. Past performance is not an indication of future results. This content is for educational or entertainment purposes only and is not investment advice. Stocks started the week on a positive note but reversed course on Wednesday and Thursday, leaving the major U.S. indexes little changed overall. At the market's weekly peak on Tuesday, the three major U.S. indexes had fully recovered the losses experienced since the beginning of Russia's invasion of Ukraine in late February. The nearly 5.0% quarterly decline for the S&P 500 in the first 3 months of 2022 marked the index's biggest quarterly setback since early 2020, when the pandemic began. Despite the quarterly loss, the S&P 500 ended the quarter with a positive month in March, when it rose 3.6%. For the first time since 2019, the yield curve inverted, as the yield of the 2-year U.S. Treasury bond rose above the yield of the 10-year bond. Such an inversion is an indicator of concerns about short-term interest rate increases as well as the possibility that a recession could loom ahead. Consumer prices in the Eurozone rose 7.5% in March, putting the currency bloc slightly below the latest 7.9% rate for the U.S. Consumer Price Index. In February, the Eurozone's inflation rate was 5.9%. Since then, the war in Ukraine has fueled higher energy prices and rising inflation across the continent. Our first stock type is dividend earning stocks. These are a great way to earn passive income. This week's suggestion is Kimball Royalty Partners, with ticker symbol KRP. Kimball Royalty Partners LP, together with its subsidiaries, acquires and owns mineral and royalty interests in oil and natural gas properties in the United States. It owns mineral and royalty interests in approximately 11.4 million gross acres and overriding royalty interests in approximately 4.7 million gross acres. The company's mineral and royalty interests are located in 28 states and include ownership in approximately 122,000 gross wells, including approximately 46,000 wells in the Permian Basin. The company was founded in 2017 and is headquartered in Fort Worth, Texas. Bob Rivnes has been the chairman of the board, chief executive officer and co-founder of Kimball Royalty Partners. Some technical analysis data shows that Kimball Royalty Partners' return on equity is 7.9%, its average volume is about 353,000, its market cap is $1.06 billion, its beta is 1.71, its PE ratio is 31.98, and its EPS is 51 cents. Our rating is 10 and we consider this stock as a strong buy. Based on experienced analysts offering 12-month price targets for Kimball Royalty Partners in the last 3 months, the average price target is $21.68, with a high estimate of $25.20 and a low estimate of $17.17. With current price at $16.31, this would mean almost 33% average profit over the next year. Kimball Royalty Partners pays an annual dividend of $1.32, which amounts to a dividend yield of 8.09% and a dividend growth of 94.74%. The Exdividend date forecast is the 29 hours of April, so buying a Kimball Royalty Partners stock by then will pay you 37 cents on 9th May. The above analysis is not exhaustive and just presents you some important insights. We suggest using this analysis and carry out your own detailed research before taking a decision to open any position. Our second stock type is growth stocks. A growth stock is a share in a business that's shown above average earnings and has the potential to grow faster than the overall economy. This week's suggestion is Roku, with ticker symbol Roku. Roku Incorporated, together with its subsidiaries, operates a TV streaming platform. The company operates in 2 segments, platform and player. Its platform allows users to discover and access various movies and TV episodes, as well as live TV, news, sports, shows, and others. The company has 60.1 million active accounts. It also provides digital and video advertising, content distribution, subscription, and billing services, as well as other commerce transactions, and brand sponsorship and promotions, and manufactures, sells, and licenses smart TVs under the Roku TV name. In addition, the company offers streaming players, and audio products and accessories under the Roku brand name, and sells branded channel buttons on remote controls of streaming devices. It provides its products and services through retailers and distributors, as well as directly to customers through its website in the United States, Canada, the United Kingdom, France, Mexico, Brazil, Chile, Peru, North and South Americas, and Europe. The company was founded in 2002 and is headquartered in San Jose, California. Anthony Wood is the founder, chairman, president and chief executive officer of Roku. Some technical analysis data shows that Roku's return on equity is 9.3%, its average volume is about 7.64 million, its market cap is $16.99 billion, its beta is 1.87, its PE ratio is 73.43, its EPS is $1.71 and its asset growth is 79.79%. Despite our rating as 7, we consider this stock as a moderate buy. Based on experienced analysts offering 12-month price targets for Roku in the last 3 months, the average price target is $125.56, with a high estimate of $533.40 and a low estimate of $95.95. With current price at $125.56, this would mean about 62.5% average profit over the next year. As the worldwide leader in streaming video platforms, this company wins as long as the digital media sector is growing. Roku investors don't care which streaming service might be winning or losing the channel wars, because all those rivals rely on Roku's tried and true hardware and software solutions for putting their content in front of consumers. Furthermore, Roku is introducing new revenue streams such as its own lineup of original shows, on-screen shopping tools, and more. We ain't seen nothing yet. Roku is poised to bounce back from this mysterious sell-off with a vengeance. The above analysis is not exhaustive and just presents you some important insights. We suggest using this analysis and carry out your own detailed research before taking a decision to open any position. Our third stock type is blue chip stocks. These are typically large, well-established and financially sound companies that have operated for many years and that have dependable earnings, often paying dividends to investors. This week's suggestion is Taiwan Semiconductor, with ticker symbol TSM. Taiwan Semiconductor Manufacturing Company is a Taiwanese multinational semiconductor contract manufacturing and design company. It is the world's most valuable semiconductor company, the world's largest dedicated independent semiconductor foundry, and one of Taiwan's largest companies. It is majority owned by foreign investors. The company was founded in 1987 and is headquartered in Hsinchu, Taiwan. C.C. Wei has been serving as Taiwan Semiconductor's president and chief executive officer since June 2018. Some technical analysis data shows that Taiwan Semiconductor's return on equity is 29.3%, its average volume is about 14.4 million, its market cap is $533.14 billion, its beta is 1.02, its PE ratio is 25.63, its PEG ratio is 1.29, its EPS is $4.01, and its return on capital is 28.8%. Our rating is 8 and we consider this stock as a moderate buy. Based on experienced analysts offering 12-month price targets for Taiwan Semiconductor in the last 3 months, the average price target is $154.79, with a high estimate of $201.17 and a low estimate of $128.76. With current price at $102.79, this implies a 50.59% upside potential over the next year. With share prices down 10% in 2022, Taiwan Semiconductor looks like an attractive bet right now. It's trading at 27 times trailing earnings, which is a discount to last year's earnings multiple of 30. Buying the stock at this relatively discounted valuation looks like a good idea given the company's impressive growth and its role in the semiconductor industry. The above analysis is not exhaustive and just presents you some important insights. We suggest using this analysis and carry out your own detailed research before taking a decision to open any position. Next week, many companies are going to release their earnings reports, which is one of the most potentially volatile times of the year for equities, and if we are not careful enough, we could put our entire portfolio at risk. Companies may announce earnings or losses and stock prices may go up or down significantly. For this reason, we suggest that you avoid or carefully consider opening a position for the following stocks during next week, and wait to evaluate the earnings announcement before deciding to invest. Monday 4th April will be the most popular day of the week as Vi Global Growth, Cortex EMI, Permian Basin Royalty Trust, and Lavere Holdings Corporation among others will release their earnings on this day. Acuity Brands and NovaGold Resources will release earnings on Tuesday 5th April. Exelon Corporation, RPM International and Levi Strauss & Company will release earnings on Wednesday 6th April. Constellation Brands and Conagra Brands will release earnings on Thursday 7th April. Finally, Vinco Ventures will release earnings on Friday 8th April. Watch these stocks' prices carefully and think twice before making any decision. Next week will not be that popular among dividend stocks, but we have some interesting options to suggest. Monday 4th April is the ex-dividend date for the Bank of Nova Scotia and Agilent Technologies. Tuesday 5th April is the ex-dividend date for JP Morgan Chase, Thor Industries, Cisco, Gap, AECOM, and the New York Times Company. Wednesday 6th April is the ex-dividend date for Preferred Bank, ABM Industries and Simpson Manufacturing Company. Thursday 7th April is the ex-dividend date for General Dynamics, American Express, MasterCard, Oracle Corporation, and General Mills. Finally, Friday 8th April will be the most popular day of the week and is the ex-dividend date for Universal Corporation, Intuit, Micron Technology, and Hormel Foods. Be sure to buy any of the above stocks before the market closing of the ex-dividend's date previous day to benefit from the dividend payment. If you find this video useful, please like it, leave your comment below, share to a friend and subscribe to our channel. See you next time.